If you're a business owner and you are working with a payroll company to pay your employees, there are chances you know about pay-as-you-go workers' comp insurance. So, workers' comp insurance, as you may or may not know, is required in most states for businesses that have at least one employee. That could be a part time employee, full time employee, family member helping you out, anybody that is considered someone that is not yourself, the owner, has to be covered by workers' comp insurance. So what happens is normally when you purchase your workers' comp insurance, you give your insurance company an estimate of the number of employees you have and the payroll attached to those employees and the type of work that those employees are doing. So how many employees are office employees? How many employees are laborers? How many employees are actually on the floor? What happens is at the end of the year, the insurance company conducts what's called an audit. And if you're a business owner and you have workers' comp, you probably twitched when I said the word audit. And that is when the insurance company verifies that all those figures that were estimates at the beginning of the year are correct. Because, for example, if you start off your business with 10 employees and then you grow astronomically, and at the end of the year you're at 20, the insurance company will adjust to make sure that they're accounted for those employees, accounted for that payroll, and then you would get a bill for the difference. Same thing if you started off with 10 employees, then you had some restructuring, and maybe now at the end of the year you have five. The insurance company will adjust that, send you a refund for the difference. With pay-as-you-go insurance, it's completely different. Pay-as-you-go is when an insurance company for workers' comp connects to your payroll company that you normally use so that every 2 weeks when you pay your employee, they get an exact amount of what that payroll is and price your workers' comp accordingly. So let's say this week when you go in and you report your payroll is $10,000. Your workers' comp insurance will be billed at the same time based on that $10,000. If next week it's 20,000, same thing. So what happens is this makes it easier for you to be able to predict what you're going to pay. Well, not so much predict what you're going to pay, but really to avoid spikes, right? So instead of having that spike at the end of the year, you're going to get a huge audit and you don't know if you're going to be able to pay that audit or not. You're able to fluctuate up and down depending on your actual payroll. Pay-as-you-go insurance for workers' comp is available with most insurance companies. So if you want to work with a local agent, but you still want to use a payroll company, don't think you have to switch to them in order to get workers' comp insurance to be pay-as-you-go. You don't. Pay-as-you-go is available through most insurance companies for most business owners. All you have to do is just ask your local agent and they will set you up.